welcome. I am Philip Williams, the founder of PhilTheGap, a company that the main focus is helping you to find and fill the gaps in your financial knowledge so you can make smart decisions with your money. Thank you for joining the discussion today. You should be very excited. We have a very special guest, distinguished guest, Miss Eva Mitchell, the CEO of the Trinidad and Tobago Stock Exchange. So you should be just as excited as I am. If you're wondering the strange background, usually I would do these discussions, interviews from the PhilTheGap office, but I am here in Jamaica from my hotel room, where the Jamaica Stock Exchange, they just had their conference, and Eva had the opportunity to discuss some exciting things that the Trinidad and Tobago Stock Exchange intends to do going forward. So PhilTheGap is bringing that conversation to you, right? We're going to also be discussing things that happen in the market in 2024, some of the things to look forward to in 2025. If you're an experienced investor, you're just starting out, you have, you're not sure, this conversation is packed with insights for you. Eva, welcome. How are you?
I'm good. Thanks for having me, Phil. I definitely have to put this one under my belt now. It's a pleasure being here. I've always wanted to be on the show, so I'm finally here.
Wow. Okay. I'm gonna write that down in my journal today. 100%. That has to be the high point of my day. Yeah, so I like that. So I mean, yeah, it's interesting, yeah, because a little while ago we were in person, and now we're here virtually on screens. But it's great. It's great to have you. So I want to know. So we're gonna get right into it.
Right.
A lot PhilTheGap. I want people to know that investing is accessible. Sometimes it may seem lofty. There are lots of things that go through people's minds when they're thinking about investment, the emotions that they may have. And, I think sometimes people may look at you, they may even look at me or professionals in the industry and just wonder, you think you have it all together. But I want people to know, even me having a finance degree, starting investing wasn't easy, so it was a bit nerve-wracking for me because you're actually going to take your hard-earned money and make an investment. So for me, I think I know how daunting it can be. So I was just wondering, what was that like for you?
Well, Phil, and I'm happy that you actually asked that question, because it was daunting for me as well. But in retrospect, that's how I bought my house.
Okay.
So
Okay.
I mean, what a price to pay for and what a reward for that feeling at the start. I think to quell the fears and concerns that first-time investors will have, you really need to just first figure out, what do you want? Do you want to build long-term wealth for yourself? Do you have certain assets that you have in mind that you want to get by a certain age? Basically identify your objective. So my objective back then was to, one, become financially independent, and two, become one where I have certain assets. I'm able to purchase certain assets by building wealth over time, right? So that was my objective. Did I first go into the stock market as a first-time investor? No, because I had concerns about the stock market. So I started off with limited knowledge on, around financial literacy. I started off with plain vanilla mutual funds. So on a monthly basis, I put aside a certain amount of my salary and I invested in mutual funds. With that, I was able to monitor my savings over time. I was able to move in and out of my savings over time when the need arises. And I was also able to follow with statements, right? Then I got into mutual funds where the prices float, so floating NAV mutual funds. And floating NAV mutual funds basically works similar to stocks, where prices move up and down. So I sort of conditioned myself to that movement, and I was okay with it, because I saw when there's a low opportunity, I was able to buy at a cheaper price. And of course, on the highs, I was able to sell and crystallize my gains. So I felt comfortable at that point in time going into individual stocks. And like I said, it has benefited me immensely. Of course, there was a lot of emotions that had to be tapered along the way. But in the long run, I would surely say that it is something that has benefited me in the long term financially, and also added to my financial independence.
I like that. I like that. I know it's good because listen, people need to know that, right?
Yeah.
It is, and it's not, it's not about downplaying people's emotions, because you would have those kind of feelings. But I think it's good that people know, that yeah, they can invest. And I like how you said when how you started. One of the best ways to start, as I said, start with things that you know, and it's good to also understand the type of how you feel about risk, how you feel about, if you're making an investment, if it's going to fluctuate, how you're going to feel about that. I think that's very important, because a lot of times people are thinking about the returns, but to get returns, obviously you have to take some risk. If you don't want to take risk, there's also risk in not taking risk. I'll just say that.
Exactly.
As we on risk, I mean, just what would you tell somebody thinking about investing right now, just in terms of what the performance was like for 2024 on our local stock exchange? What would you tell, a new investor? What message would you give them, somebody who's thinking about starting, and possibly looking at, how last year was, and whether they should or shouldn't
Well,
have those
I would
feelings?
say to first-time investors that now is really a very opportune time. It's the perfect time to invest. Like I've been saying in the past, and I'll continue to say, you buy when something is low. Even you go to the grocery, you shop online, you buy when it's low, when the prices are low. So the prices or the stocks that are offered on the Trinidad and Tobago Stock Exchange are at immense discounts at this point in time. I mean, it's significantly discounted. If you look at where these stocks were trading 5, even 10 years ago, there's significant value in it right now. So I think for the first-time investors, I think from a timing perspective, now is the right time to get in. I also would like to say that, if you look at the type of stocks that are listed on our exchange, and as a consumer, you relate yourself to those particular stocks. For example, if you buy KFC, then you should buy Prestige Holdings. Prestige Holdings, if you held Prestige Holdings last year, you would have your stock price would have appreciated, I think, north of 20%. So
Yes.
you would have, so
Yes.
your stock, your portfolio would have actually advanced 20% by just simply holding Prestige Holdings. I mean, there are a lot of companies on the exchange that would have gained in prices. I mean, Answers, the CIBC, just to name a few. But at the same time, there are also companies that did not perform very well and also offer a lot of value. When you also take a closer look at the companies that are listed on the exchange, you would see that those companies continuously have performed well financially. So we have very strong, solid companies. They also have habitually rewarded investors for holding on to their shares. And that reward was by way of dividends. As a matter of fact, the average dividend yield on our exchange is about 4%, which is actually the highest in the region, right? So you're actually benefiting from holding these shares despite the decrease in the value of the price. I mean, the stock exchange is something where it's an avenue that you use for long-term wealth. It's not an avenue that you would want to use for a quick win. It's something that you invest in, you stay, you watch, you look out for the opportunities, and the opportunities come, they will definitely come. And you take advantage of the opportunities. And I would say now we're in a period of opportunity, and I will encourage anyone to take a second look, and take a third look at the stock market. One thing I'd like to demystify, though, Phil, is the myth that stock market investments is for the wealthy.
Yes.
If I could just well, first of all, that is not true. It is for anyone of any income class, any age, any demographic. But let me not just say it. Let me marry that with some numbers. So if we look at our investor pool over the last 10 years, we have grown in terms of retail investors by over 60%.
60%.
60% in
So,
terms of
wow,
retail
that's an
investors,
okay.
which is
That's
a
very impressive.
significant movement.
Yeah, it's
If
a big
you
move.
exactly, and this is in the face of you know, we did not have IPOs coming to our platform every year.
Right.
There are years within that 10-year cycle where the market would have declined, let's say during COVID. And during COVID, we actually added retail investors because I guess everybody's home, everybody has time to look at the news, you
Yeah.
know, people are on online platforms and stuff. We had some Robin Hoods during that
Then people
period,
were
and you
trying
know,
to, and people
everybody.
were trying to get rich.
Exactly,
Trying to get rich.
exactly.
Yeah.
So we actually saw an increase of investment, investor interest around that time. And ironically, that is the time that we also launched our online trading platform, Top. And Top basically allows anyone who has a brokerage account to trade at any time. Of course, your access is 24/7, but you can trade whenever the stock market is open, right? You have access to news, so you can edify yourself in terms of what's happening in the market. And so during that time, we launched our platform, and our platform has really outperformed our expectations, right? The point I want to make is when we look closer at that increase in investors over the 10-year period, we see that a lot of the investors are young investors.
Okay.
And these are young, budding, young professionals who is not making that level of salary where they can qualify as being rich. It is the average John and Jane Doe who sees opportunities in the stock market and who also, more importantly, wants to build wealth over time. So these investors are coming in, they're using our platforms, they are ensuring that they get the information, and you know, programs such as yours, Phil, is really supporting that trend and supporting that move. So again, I'd like to applaud you for, you know,
Thank you very
adding
much.
value
Thank
to
you very much.
financial literacy on a national level. But it's platforms like this that actually support wealth creation or support access to wealth creation. So like I said, the investors that we see in the market are not investors that are wealthy or rich. It's the average John and Jane Doe who,
Yeah.
as a consumer, will support certain goods and services. And if it is that you are, you know, you patronize the products, then why not own
Exactly.
part of the company?
Exactly. Well, you know, I agree with that 100%. You know, I tell my viewers that they don't only have to be a consumer, you know, they can invest. And so I like that analogy. And I like, you see, the thing to what I want to underscore on zero is long term. You have to be thinking long term. So there's a lot of information out there, and I know people want to get rich quickly, and there's misinformation, right? So investing is for the long term, and you can. And I'll tell you something, so because this is the other question that I had. So because that message was for a new investor, you know, somebody thinking about, or you know, now thinking about coming onto the stock exchange. So for me, and you would think, so I'm just going to share. I don't think I ever gave this story on my platform. If I did, it would have been a very long time ago. I made a mistake very, very early in my 20s. Looking back, I would say it was a mistake. I could tell you what I was thinking, right? So I bought stocks. I wouldn't tell you what stocks, but the first investments I made. So I had two stocks, and Trinidad and Tobago. This was 2006, right? So I started like real job in let's say 2003. And Trinidad qualified for the World Cup in 2006. And there was no way that I was going to miss that. And I had these stocks, and they were, you know, it was down. So let's say I was at 20, it was $15. I was like, you know what? I don't want to take a loan to do this. So a lot of things was good, you know, going on in my mind. The long and short of the story is I sold those stocks to go to Germany, right? I did have a great time. But looking back, I should have never sold those stocks. For somebody who is in the market right now, what would you tell them? Because they might be thinking of coming out. They might think, you know, let me sell these shares now because I don't know. For whatever reason, sell it to buy, I don't know, a carnival costume, sell it for a vacation, or just sell it because, you know what, I'm not a losing faith. What do you say to that?
Well, I would say again, I would reiterate your point that stock market investment is for long-term wealth creation. If you simply look at the prices now, it will cause a panic. It will cause anyone to panic. But we can't look at now. We have to look future. Look at the fundamentals. Take some time and look at the fundamentals of the stocks, the companies that you are invested in. If you're invested in the banking sector, our banking sector is well diversified within and outside of Trinidad. As a matter of fact, most of our banks are actually more diversified externally. With, I mean, when I say externally, I mean outside of our region,
Yes.
than they are than they operate internally, meaning indigenously, right? In Trinidad locally. So they are built-in diversification and built-in hedging in our companies with respect to risk just locally. And of course, if our companies are so well diversified and so well positioned to offer and continue to offer and continue to outperform their previous years, then that means that there's value in holding on to your stocks. That means that there's value in actually holding on, being rewarded for holding on through dividends. So I would not advise an investor to sell right now. You'll actually be doing an injustice to yourself because you would be selling at a discount. So hold on, the markets will turn. It is going to turn. Understand that the stocks that you actually hold are companies that are strong and resilient and have been rewarding you since you've been holding on to it. The only reason that you're selling is because you're looking at the price, but understand that that will turn. So that would be my advice.
Yeah, that's great advice. Hold on. Hold on. The market will turn.
Yes.
That's great. No, because it's going to be up and down. It will be up and down.
Yeah.
Generally, the trajectory is up, right? And certainly selling your stocks at a time. Now is not a good time to do that. You
No.
sell when you sell your stocks, you sell it when obviously it's achieved the objective, which is, you're working towards some long-term goal. So yes, you have to buy, you have to hold. Good.
I would also say, sorry, Phil, but I would also, speak to a professional, a licensed broker. Talk to them about the outlook for the market.
Right.
And specifically the outlook for that particular company.
Yeah.
Now, we at the exchange, we put a lot of focus on ensuring that investors have the information they need to make the right decisions.
Right.
And of course, decisions are not only made on just fundamentals. Decisions are made on whether or not on the need. So is it that you need the cash now? Then that's a different story. But if there's no immediate cash need, I would say talk to an investment professional, a licensed investment professional, and let them advise you. Let them speak to you about the outlook. Let them speak to you about when they expect the markets to turn. And then, you internalize that and decide whether or not this is something that you can lock down and sit down for a couple more years before you actually see any sort of turn, or if it's something that you need to satisfy an immediate need for, then, it depends on your need at that time.
Yeah, no, correct. And those decisions are placed, which is important. You have to know, again, you're right.
Yeah.
You have to know you have to understand what you're getting into before you make those decisions. And you can't just be thinking about the returns. And then when things don't happen the way you want it to happen, the timing, that's when, people sometimes get upset or have feelings or emotions about what they've done with their hard-earned money. But investing in the stock market, you should start early, but again, yes, you should be thinking about starting early, yes, but understanding yourself and what you want to get out of it, how you're going to feel along the journey. But what I've heard from you, Eva, is that at least, the question that I had, but you've answered the question. But just to confirm, based on the numbers that you gave in terms of, the increase in retail investors, I think what it looks like with all of the information that is being put out there, it seems as though that perception of, well, investing is not for me, and investing is just for, the investment professional or the person who has a whole lot of money. It seems as though that perception is changing, and that is gratifying, that is heartwarming. So that is stuff to be excited about. So, and kudos for you too, because, I tell people, because the stock exchange, your website is so resourceful. I think, of course, investment professionals are going to go on, people who are investors, but I think a lot of retail investors are not aware of the value that is there and how the information that is accessible to them to learn really how do you navigate everything, how you navigate, looking at the numbers that are seemingly so complex. So I'm glad to know that that perception is shared. 60% is a lot. That's pretty impressive. So, I mean,
Mhm.
that all the
Yeah,
hard
and
work is paying off, that's what's going on. All the hard work is
exactly.
paying off.
But we still
But
have a long way to
oh, no,
go.
it's ongoing.
Yes.
That is the thing, but it's financial
Yeah.
education is that, it's early, it's ongoing, it just has to be consistent. That's what it has to be. Repetition wins. It has to be consistent.
And we're living in a time where wealth creation is even more important now than it was 20 years ago, right?
Mhm.
We're all faced with inflationary concerns.
Exactly.
We're
Correct.
all trying to be comfortable, to live comfortably, despite the headwinds and the challenges. So building long-term wealth is something that's important to every household. The data has also showed us, Phil, that we've had an increased amount of interest from female investors, which to me was a welcome surprise and a
Yeah.
welcome
Wow.
increase. So
Mm-hmm.
it shows that women are becoming more financially independent. Women are becoming more fearless with respect to stock market investments. We are risk takers in all other senses,
Yeah,
right? So why not be a risk taker in terms of,
exactly.
not how we save, but how we invest our money. We need to let our money start working for us. I mean, we work hard for it, right?
Correct.
So we need to let our money start working for us. So this is definitely something that we will leverage in the coming months, because it's something that I want to see that pattern. I want to see that pattern continue. So in whatever way we can support it as a stock exchange, as a market facilitator, we will. And we will continue with our investor education and financial literacy programs to ensure that the right content is out there. I mean, everybody is aware of the type of access of information that we have now, but I do think that as a regulator, it's important that we ensure that responsible information is also in the market.
Correct. Yes.
So, and it's something that we at the stock exchange take very, very
Very
seriously.
seriously.
Yes.
Very good. So, and I was wondering what are the things, I mean, if you are, like, if you can share, what are some of the things? Because we talking about, I've heard people coming on, and of course the work is ongoing. So you want that momentum to continue. You want people, young people in particular, well, people who should be investing, not just young people. But you
Yes.
tend to find sometimes young people can be distracted by, what they see on screens, what they think their life should be, and watching everything else. And that could be distracting. But what I wanted to know is, like, what is the stock market doing, the stock exchange, sorry, doing to make the stock market more accessible for people who might be distracted or might have the feeling that, well, it's not for me. What are some of the things that you have on the horizon, if you can share, to make it more accessible for investors to, for the everyday man in Trinidad, and to be able to
Yeah.
feel as though, listen, this thing is for me and I can participate, I can invest.
Yeah, and Phil, that has been so important for us. It's actually a very large part of our 3 to 5 year strategic plan to
Okay.
make the stock markets more accessible. Yeah, and we think that accessibility is a function of two things: how well we can offer and use technology, right, to access the stock market. And then the other thing is the flow of information, the quality of information that comes to the stock exchange, or comes to the stock market. And if those things don't exist at a particular level, what it will cause is frictions in the market. And when I talk about frictions in the market, I mean, like, how easy can I get in and out of a stock?
Right.
How easy can I trade? How fast can I get my money back when I sell? How many brokers do I have in the market to choose from, right? How can I access information from the exchange? How frequent is the information from the exchange? And, the quality of information on the exchange, that if those things don't exist at particular levels, what's going to happen is you're going to be stuck, and the frictions are going to come in the way of any sort of progress. So what we have done, and I mentioned it earlier, is that we started accelerating the use of our digital platforms. So we have, like I said before, launched our online trading platform. So everyone has access to trade. We are now digitalizing our back office functions so that we are able to now better serve the market in a more efficient and effective way. So in the past, transactions that would have taken a week or two is supposed to be done in less than a day, right? So we want to have that momentum within our own operations as well. We would have reduced our settlement cycle. And when I say settlement cycle, meaning how long it takes for you to sell a share, well, how long it takes for you to get your money back after selling, or how long it takes for you to get shares after buying. We've reduced it to 2 days, and our plan is to reduce to 1 day in the next year. We've also expanded the amount of brokers in the market. So when I started, we were about 6 brokers. We are now at 8 brokers, which means that investors now have more options to choose from in terms of, who can I rely on for my brokerage service need. And we're also having discussions with our brokers to see how we can simplify that onboarding process so that at the point of at any point of engagement from a brokerage perspective, you are able to, open up brokerage account in the easiest possible way. So we're also looking at that because, again, we want to reduce the frictions. The feedback that we got was, some brokers, they require a very high minimum amount to start investing. That we know can be a challenge, and that could be a hurdle for us. So, we're having discussions with some of our brokers to try to come down to a reasonable level. But what I would say is that we have other brokers in the market who would say, you just come. There's no minimum amount, you just come. So there are options, right? Because I could understand that can be a bit of a hindrance for someone who is now starting off, right? So there are options in the market. But the thing is, all of these things add to a more conducive environment for trading. And it has so far resulted in the increase in number of accounts that are being opened at the exchange. So I think what we're doing is working in the way that we want it to work. There are more that is being done in the background. For example, we've been doing a lot with respect to putting more products in the market. So investors now have more options in terms of listed companies. So I expect to see some IPO activity this year. So yes, so I will encourage investors, new and existing investors, to look out for that and look out for the opportunities that that will allow or would provide. I would also want to say to investors who participate in IPO activity, don't just participate and hold, take advantage of the opportunities that come within, even after your subscription period, after you buy into it, there are opportunities that will come after. So take advantage of that. Not just in that particular issue, but, just look across the exchange. There are other issues for you to, other stocks that you can actually take advantage of, especially now. So what we want to see is active participation in the market. And the role of the exchange is to ensure that we create an environment that allows for that. And we've been doing a lot of work where that is concerned. We will continue to do work in the future, but the overall objective is to get us to move that needle from 16% of the working population invested in the stock market to 30% in the next 5 years. So you want to double that.
Very good, very good.
Yes, so you will see us actively pursuing that.
That's great news, and I think people would be, well, that's a lot to look forward to, one, and I think people would be very excited because I get messages every day in terms of how can I start, how to onboard. So that's good news in terms of the onboarding, possibly making, easing that some of the frictions there. And you spoke about the amounts, because that's the usual question. How much should I start with? What's the best amount? So you have to explain to people, it's really not, what's the best amount? The best amount for you. Somebody might be able to start with 5,000. Somebody might be able to start with 1,000. It just depends on what your financial situation is. So I know we just have probably just about 5 minutes, Eva, to have two more questions for you. I know we
Okay.
yeah, we mentioned you mentioned the financial sector. Are there any, would you pinpoint any other sectors where they may be value, or what should investors be looking forward to just from a market perspective in 2025?
Well, I would say look at the price to earnings ratio across all sectors, right?
Okay.
And price to earnings ratio is
Okay.
really how much am I paying for every dollar of earnings that the company makes, right? So when you look at the
You might give me a
average,
post, you might give me a post there, I might do a whole post on price. That's a good, no, that's, yeah. Okay, sorry, I cut, yeah, go ahead, sorry.
so when you look at the average price to earnings or PE ratio over the last 10 years, it has been around 18 times, 20 times, right? This is average across the sector specific. It's 10-year average.
Right.
So I would say look at the opportunities with respect to the PE pricing,
P pricing. Okay.
and look at specific industries where you participate in as a consumer and you will continue to participate in as a consumer. Of course, this is separate and apart from the fundamentals of the company, which is really important. But as I said, look at the value in terms of price that you would pay for the company at this point in time and the price that it has once traded. And you'll see that it is at it's at a significant discount. And right now it's at a point where you have to take advantage of it and jump in.
Okay. Very good advice. And I'm making a commitment to everybody viewing. I'm going to, because it's difficult to break down a P. Somebody may not
Yeah.
understand ratio, but I'm making a commitment. But that's very good advice, Eva. Appreciate that. So
No
what do you
problem.
say? Last question. The person who is watching you today, watching our discussion, thinking about it, they want to get started. What would you say the most important step for that person? What do you tell that person?
Now is the time to start. Do not wait. The market will turn and you will miss out on an opportunity to get real value at a discounted price, at significantly discounted prices. Now is the time for you to start. Even if you start small, the point is start. And of course, if you need any information with respect to the company, the fundamentals of the company, use our website. There is a lot of information on our website for you to, review and get the information that you need specific to the performance of the company. Most of the companies that trade on our exchange also have their own website, so visit their website and just talk to a licensed broker or a licensed professional who can also give you advice. But the point is, there is immense value in the stock market right now. If you buy at significantly discounted prices, and you will be rewarded through dividends paid by the company. Create long-term wealth for yourself.
Start now. I like it. Start now. And I always, as I said, I tell the viewers, I tell my followers, you don't only have to be a consumer, you can be an investor. You can invest.
Absolutely.
You just heard from the CEO of the stock exchange. The time to start is now, right? I just want to remind you that you do have what it takes to take charge of your financial destiny, your financial journey. So, right now is the time to start investing. There you have it. Eva, thank you so much for
Oh
sharing so
gosh, it was
openly
my
and taking the
pleasure.
time today. I was happy, very,
So I
very
could
happy to have you.
check that box now.
I love that. I love that.